Namaste, welcome to Arthaniti, where we discuss money and money related tools to help you in your everyday investment decisions. I am Dr. Shifalika Gokhale. I hold a PhD in business practices of mutual fund houses. In today's video, we pay tribute to a Nobel laureate, Dr. Daniel Kahneman. He passed away on the 27th of March 2024. Now, why is it important to read to know about Dr. Kahneman's work? Most of us in India might not have heard about him, but he got the Nobel Prize in the year 2002 for his work in behavioral economics. Now, the work focused mainly on human judgment and decision making under uncertainty. Dr. Kahneman's journey of cracking the human decision making code was not a straight shot. A trained psychologist, he started his career in the Israeli Defense Forces, after which he took up a teaching assignment with a university in Jerusalem. That's where he came in contact with his long term associate, Dr. Amos Tversky. Now, the two of them have extensively researched and worked in the field of human decision making and behavioral economics for more than 30 years, which led to Dr. Kahneman's winning the Nobel Prize in 2002. Together, they conducted extensive experiments which helped them to understand the quirkiness of human decision making. People consistently made illogical decisions, defying all logic and traditional economic models. Through their research and observation, they saw a pattern in which people made decisions. They classified the thinking of people into two systems, System 1 and System 2. System 1 basically worked on intuition. It was a fast paced thinking, decision making process, whereas System 2 was laid back, analytical, and, in the words of Kahneman, a lazy system. This groundbreaking discovery not only revolutionized behavioral economics but also shed light on the messy, illogical reality of how we navigate through the world, especially the world of financial decision making. To help you understand the System 1 thinking and System 2 thinking as proposed by Kahneman, a small example. Say, for example, you own a manufacturing facility and are negotiating an order with an international buyer. Now, the buyer is pressurizing you to reduce the prices, citing all possible reasons of geopolitical tensions, recession in the economy, lowering of demand, yes, and high overhead costs. He will give you 10 reasons why the price has to be reduced. Now, as a seller, when a decision comes in front of you and you have to either accept it or negotiate further, there are always two brains that work. The first one, according to Kahneman, is the System 1 thinking, which is fast, intuitive. That brain will tell you to go ahead and accept the offer at a lower, reduced price. Yeah, at least you will make some profit and you will get rid of the stock. The aim is to sell the stock as early as soon as possible. Your System 2 thinking, which is laid back, analytical, slow, lazy, what will it help you to do? It will help you to analyze the overall situation. Is this a one time buyer, or whether accepting this offer at a reduced price will help you build a long term relationship with this buyer? If you accept the offer right now, will it hinder your future price negotiations with the same buyer? Are reduced profit margins sustainable? Yeah, all these, it will help you analyze a situation from not only how it will affect you today, but in the future as well. Correct? So, what Kahneman says is that when you have to face a decision, when you have to take a decision in your life, you're always in two minds. going the easy, fast way and going the analytical way. Maybe it is a bit slower, but it will give you a more all round answer to what is good and right for you. As investors, what can we learn from the work of Dr. Kahneman? What can we implement in our everyday investment decisions? Now, for the first principle that Dr. Kahneman propagates is beating the anchoring bias. In simple words, it means we are very judgmental about the first piece of information that we hear or get. The all other information that follows through is subdued by that first piece. Now, for example, few days back you must have heard on news that a container ship crashed into a bridge in Baltimore, US, causing the whole bridge to collapse. Now, all kinds of conspiracy theories were floated on social media, right from a terrorist attack, an intentional crash, human inefficiencies, all other bridges in the US should be put on high alert, so on and so forth. Later on, news came in that the ship was manned by 22 Indians. Questions were raised about the efficiencies of the ship's staff. Later on, the mayor of Baltimore came out with a statement publicly thanking the ship's staff to have given a mayday call on time so that the authorities could stop the traffic from going onto the bridge and a major catastrophe was averted. Now, all this information percolated one after the other. But the first piece of information that we saw about the crashing of the boat, all kinds of theories we started building in our mind. How can a ship crash like this? Weren't there any pilots on the ship? What was the staff doing? Correct, and that remains. All the information that we get after it has that bias about the first thought or the first understanding that we have about a particular news. What Kahneman says that we have to do away with that bias, thinking rationally, logically, analyzing and processing all the information that we get about a particular news or a happening will lead to a good decision. The second principle that Kahneman suggests is understanding our psychology for loss aversion. Imagine you have bought a share, say for 100 rupees. Now the price of the share has fallen to 80, and the future of the company is not all that bright. There are news items which suggests that the management of the company is not good or the future is not all that bright. But you still cling on to those shares, thinking that if the market rebounds or if the share rebounds and you can sell the share above 100, you will avert the loss. Understanding this loss aversion psychology is necessary according to Kahneman. Understanding and maybe selling the shares at a little loss and investing it in another share which will give you higher profits is what a smart investor should do. The third principle is to be beware of framing. Now, the news that we see or is presented, the way it is presented to us, full with background music and the tones of the anchors, uh, the news is very dramatic. For example, take the example of HDFC Bank after its merger with HDFC. Now, following that merger, the share price saw price correction. Some news channel ran the news that HDFC Bank was in crisis. The share price plunged. All these dramatic framing. Now, for an investor, say if you are not a seasoned investor and you take decisions based on system one thinking, which is intuitive, you would sell the shares in panic. Be aware of such framing. Think logically. Do your research. You know why you purchased HDFC Bank in the first place and what has changed after its merger with HDFC. What repercussions will the business have? It will take some time to adjust, right? Think about all this, take all round information, and then base your decisions not on panic but on logic. Kahneman says Don't be overconfident. Overconfidence kills logic. Let me tell you a very interesting anecdote about Sir Isaac Newton. All of us have studied and learned about the laws of motion and gravity that he had formulated in English. Well, way before Newton wrote these laws in English, a Indian scientist by the name Bhaskaracharya had penned down these laws. But that is for another video. What I want to tell you about Sir Isaac Newton is in 1722, he had invested nearly 22,000 pounds, all of his life savings, in a company called South Sea Cables. Now, having made a huge profit, he exited the company. But in stock markets, to earn more, greed sets in, illogical decisions are made. Isaac Newton reinvested all the money back into South Sea Cable, and the stock prices of that company crashed. He made losses to the tune of nearly 20,000 pounds. He swore to never invest in the stock market after that. Now, such a learned scholar, a world renowned polymath, he too resorted to illogical decisions in wake of overconfidence. So imagine simpletons like us. Yeah, if we should be aware of the difference between confidence and overconfidence, right? And how that can lead to devastating financial decisions. Last but not the least, he said, do not follow the herd. Now, a few years back, we had some startup IPOs which were launched in a lot of frenzy. Yes, the fear of losing out, the FOMO, yes, the social media term that all of us abide by, that herd mentality of losing out on this prospective gold mine made a lot of investors invest their money in these IPOs. Paytm, Nika, just to name a few of them. Avoid herd mentality. Use your logic, your reasoning, your goals, your understanding, and what your brain tells you is right for you. Use that instead of blindly following the herd. To end this commentary, what are the key takeaways from Kahneman's principle? Become a mindful investor. When there is a decision which needs to be taken, system 1 and system 2 are going to kick in. Being aware of this is what is the key. For our everyday decisions which are of less importance, the first system of intuition, fast paced, might be helpful. But for decisions which have a long term impact, which are going to impact your financial well being, your psychological well being, system 2 kind of thinking is very, very necessary. It will help us go beyond our biases, think rationally, think about our goals, and when do we want to achieve them, not what is good for others but what is good for ourselves. So Kahneman's principles are absolutely necessary when we take such decisions in our lives. This was a tribute to this great economists who opened the doors about creating awareness about these two systems and how and when people should use the system to reach good decisions. The aim of my videos is to bring you such information which we do not normally see on TV or news channels, but which have an impact, which have a positive impact on our decision making process, which will help us reach better decisions. Right? So, if you have liked my video, please like, subscribe, and share this video. Subscribe to my channel for more such informational and interesting videos. Until next time, stay safe.